JJ the CPA here. In a nutshell, this is how you determine how much of a loan you can get under the Paycheck Protection of the CARES Act. For more details, go to jjthecpa.com/cares. It's 3/26/2020 at 2:11 a.m. You take your annual payroll plus the employer payroll taxes plus the employer paid health insurance plus the employer retirement match. That's going to give you your annual total of all your payroll and related costs. You're going to divide that by 12 to get a monthly average. You're going to take that monthly average times 2.5, and that's your loan amount. That's the max that you're able to loan. That's how it works in a nutshell. The rest of the video I think is worthwhile because I'm going to run through more details, calculations, and examples, and how you come up with these numbers and what the loan proceeds are used for. But I want to get to the quick and dirty. JJ the CPA, hope this finds you well. About an hour and a half ago, the Senate unanimously passed the CARES Act. It's our understanding that that will go through the House. So this is as of March 26th, 2020 at 12:45 a.m. The reason to point that out is that the president hasn't signed this yet, but we've got a real gist of what this is going to be. The House is going to pass it supposedly on Friday, but if there's some minor changes, okay. But you as my clients are wanting to know what's the big picture. I fully expect this is what it's going to be. If there's some minor changes, I don't think it would be related to what I'm going to go over in the video tonight, because what could be changed is some of the baloney stuff. So what are we talking about here? The first thing is, and there's many things to this CARES Act, it's over 800 pages long. One of the things that's been put into play is the Paycheck Protection Program. And what this is, we're going to take the average monthly of the last 12 months of these items times 2.5, and that is a loan that you can get. Practically put the few documents in and you're going to get the loan. What are we talking about here? You're going to take your gross payroll. Okay, if you have an employee that makes over 100 grand, then that employee's payroll will only be included to the tune of 100 grand. So we're going to take the last 12 months of this gross payroll, the healthcare premiums that were paid by the employer paid retirement, okay, the match, the payroll taxes, so that's the payroll taxes on top of the payroll, that employer tax portion, 7.65%. Add those together, okay, you're going to get the monthly average. I'm going to run through an example. You're going to add these together, you're going to divide it by 12 times 2.5, and that's your loan amount. So payroll, health insurance premiums, retirement paid by the employer, and the employer payroll taxes, you're going to find the monthly average based on the last 12 months times 2.5. That's the loan. The bank that will be doing this are the ones that are going to be authorized, and you need to get it by June 30, 2020. Don't know who the banks are. I'm going to run through an example. It is March 26th at 1:09 a.m. My son's got his music going. If you hear it in the background, it's basically summer vacation in Edmond Public Schools. So here is the example, okay? You're going to take the last 12 months of payroll, okay? So the last 12 months in this example of payroll is $300,000 for the entire company. $300,000 total payroll last 12 months. Don't get ahead of yourself trying to figure out how we're going to know that. We'll get to it later. 300,000 is the gross, okay? If in the last 12 months there was 18,000 spent on health insurance, there would have been 9,000 that was on employer paid retirement, okay? And then $22,950 on the payroll taxes, the employer portion. So a total of $349,950 was the total in the last 12 months of payroll, health insurance, the retirement, that's on top of, okay? It's not what your employees put in, it's what the employer matched on top of it. And most of the time it's 3%, so 3% of 300 grand. That's how I came up with that number. The payroll tax, okay? This is not the employees' payroll taxes, okay? This is the employer's payroll tax. That is gonna be 7.65% of this. And there's some other stuff that this will go up a few bucks, okay? But the total of that divided by 12 gives you 29,162 as the average month. So it's just all these costs divided by 12 says this is now the average monthly cost of all these things. And then in the CARES Act, you take that times 2.5, which would then lead to a loan of 72,906. Now, I'm gonna go through real quick how you can figure this out like that. Yes, I'm wearing a different shirt so that I can track the videos. JJ the CPA here. 1:35 a.m. on 3/26/2020. Sporting Sunset Vet. Thank you, Dr. Kennemer, Dr. Grimmett, clients for my entire time of having my practice, like a number of you. Thank you so much. Want to run through a quick way to know how much of a loan you need, because we need to know now. I got to know right now, JJ, I got people I got to pay. I got to figure out who I got to take care of. Here you go. You ready? Doesn't look like it's going to be quick, but guess what? As soon as I'm done with this one, I'm going to put up a simple one, but you need to understand. What you're going to pull is your 941s, okay? Those are payroll forms, okay? So whoever does your payroll, you need those. For right now, you're going to need 2019, take notes, the second, third, and fourth quarter of 2019, and the first quarter of 2020, which is coming up, right? Not even out yet, because we're not at the end of it. Why are we doing this? We need second, third, and fourth of 19. First of 2020 puts us together for 4 quarters, which gives us the last 12 months, okay? Now, you're gonna take that amount times 7.65%, okay? What is that? That is the employer taxes, okay? Okay, if you really wanna do quick, what's your payroll times 7.65%? That's your ballpark, okay? How do I figure out my gross payroll? You're gonna get 941, you're gonna get second, third, and fourth of 2019, you're gonna get first quarter of 2020, and you're gonna take that dollar amount times 7.65%, and now you know your round amount, because you're gonna take that divided by 12 times 2.5. Remember, just before that was the 72,906, but it included health insurance and the retirement. So when we go to the 72,906, then you're gonna look at, well, what is the health insurance? What was the retirement match? But if you're in a panic and you need to know it right now, and you need to know in 45 seconds, what was your gross payroll times 7.65%, divide it by 12 times 2.5, that's gonna be your ballpark of the loan. It'll go up a little bit. If you're paying health insurance, it's gonna go up just a little bit more if you're doing a retirement match, okay? But let's focus in right now. It's your payroll plus payroll taxes to a monthly average times 2.5. We got complications, of course, because if you have employees that make over 100 grand, we got to do some adjustments for that. This is why I have a job, right? So when you're looking through all this, this is what you're going to need. Your 941s to pull these numbers together. Here comes another quick boiled down example. JJ the CPA here, going to go through a quick calculation to get a rough idea on how much of a loan you could get for the Paycheck Protection Loan as part of the CARES Act. It's 3/26, 1:53 a.m. So here's the quick example. You've got your annual payroll of $300,000. The payroll tax is 7.65%. That's the employer's payroll tax. So you take what's the payroll times that tax rate to get to here's the payroll tax, right? This is quick and dirty. But now you're going to take here's the gross payroll. There's that payroll tax, okay? Those things come now down here to get to a total of payroll and payroll tax, which is $322,950. Now, this doesn't include the retirement or the health insurance, but we're trying to just get a quick and dirty number. We're going to take that and we're going to divide that by 12 so that we have a monthly average. So $322,950 divided by 12. Where's my assistant? So you take that total divided by 12, that $26,912 is the monthly average times 2.5. That's what's allowed. 2.5 equals $67,281. That's your loan. Okay? There's your quick and dirty. Wages plus payroll taxes divided by 12. Boom, there's your monthly. Times 2.5 is $67,281 max loan. You could then go, well, I'm paying $1,000 a month in health insurance. Okay, well, 2.5 times that is $2,500. You can lock that onto that loan. You do a little bit of retirement match. You throw a little extra on that. Okay, this gives you a quick and dirty. Now let me tell you this right now. If you're gonna try and really figure out now, is it $67,281 or is it $67,282 because of rounding? You're not gonna get the loan because they're only doing this through June 30. This isn't the max. You don't go in and have to worry about pennies here, okay? You're going in, you're gonna say, here's my documentation, and then boom, they're gonna go, this is your amount. You're gonna go, thank you, okay? So I'm giving you some quick and dirty. What you wanna know right now is, I gotta make payroll. How much money am I gonna get? First of all, I don't know when, but here's your ballpark. You got $300,000 in salary, you're talking about $667,000. Follow? All right. Here comes a couple other quick things. Here's my shirt for this one. You've never met a CPA quite like me, with the JJ hashtag on the side. Like I got like a studio going on here. 3/26/2020, 2:27 a.m. So what can the loan proceeds be used for out of the Paycheck Protection part of the CARES Act? So we talked about what the loan is in terms of how it's calculated. It is for payroll and all those expenses that we talked about to determine the loan amount. So payroll, the payroll taxes, right? So this isn't income tax, it's not property tax, it's not your quarterly estimated taxes, it's payroll taxes. Health insurance, but it's the employer portion of the health insurance retirement match. And no, that doesn't mean that if you have a SEP plan and you put 25% of your compensation in there, that's included. This is on an employer match, typically 3, maybe 5% of payroll. So the loan proceeds can be used for that. The interest, okay, not principal, the interest portion of business loans, the rent, and the utilities. So if you get one of these loans, this is what you can use the money for. All right, so that was kind of a full picture of it. To get this, it'll be through a bank. We don't know who. Basically, it's probably gonna be any FDIC bank. It's meant to be very easy. If your banker's not familiar with it, you're probably gonna get hassled over it. So you need to just go wherever you're hearing that you're throwing a little bit of documentation and you're getting the loan that you need. This is not supposed to be a normal loan process in any way, shape, or form. So again, if the bank that you're working with, love them, whoever they are, but if they're not doing this lickety split, move on to the next one ASAP. So I don't know who those are. The other aspect is it is meant for you to be using it for payroll, which is just to say, if you've let your employees go, you technically don't qualify for this. If you're using it to invest into other things, you don't qualify for it. So this is absolutely meant to be, because basically what you're saying is, give me a loan quick, and yes, I'm going to use it for payroll and rent and utilities and interest. So take advantage of it for sure. As it relates to other things in the CARES Act, it's over 800 pages. So I'm going to do as much as I can. It's basically 4 a.m., came out 5 hours ago. The House has to pass it, I guess at this point tomorrow, because today's Thursday, 4 a.m. But as it relates to this, there really is expectation of zero change to it, but you needed to know. So bottom line is that now you have a ballpark of what you'd be able to borrow, which is basically 2.5 times total payroll costs. As it relates to these other aspects, there's going to be things in there that totally delay paying in payroll tax. So we still want to do our payroll tax credits, because that means there's less payroll tax that you actually owe. But then they're going one step further to go, well, what you owe, you can pay later, and some of it you can even pay next year. Number of other things on this that I'll get out as soon as I can, but this is really the main thing. All right, hey, I really appreciate you guys, and I hope that you enjoyed it. I've got this big video, but if you do want to go back and watch any of them in the playlist called the Paychex Protection Program of the CARES Act playlist on YouTube, which is the link that I sent you to, you'll see this combined video first, and then it should be all the videos that made it up. So if you want to go back to any portion there to rewatch, you can. So I appreciate you. We're going to get through it. Let me know how I can help, and I'll talk to you all soon. Thank you so much. JJ the CPA out.